Listen, I want you to take a second and really think about this. You've worked your tail off. You've skipped the expensive dinners. You've stayed disciplined, and you've finally saved up that initial freedom fund. Now, you're ready to hand that money over to a business partner you've never even met. Because that's exactly what a broker is. It's the partner that holds the keys to your future. Now, I see people all the time saying, they're all the same. I'm just buying an SP 500 fund. What does it matter? But honestly, that mindset is a trap. I've learned the hard way that the platform you choose is the soil for your money tree. If that soil is dry, full of rocks, and hard to work with, I don't care how good your seeds are, nothing is going to grow the way it should. So, for the last 18 months, I decided to stop guessing. I stopped listening to the fancy commercials and I put my own money on the line to test the big three: Fidelity, Vanguard, and Charles Schwab. I didn't just look at the shiny brochures. I opened real accounts. I dealt with the glitches. I called their support when things got confusing, and I watched exactly how Mark's money moved every single day. Our goal and Mark's goal is very specific: that $2,850 a month target in pure passive income. But what Mark realized over these 18 months is that some platforms are built to help you reach that target, while others, well, they feel like they're trying to slow you down. I need you to stay with me until the very end, because I'm going to pull back the curtain on the actual 18-month math. I'm going to show you how those tiny, invisible differences in fees and features ended up creating a massive gap in Mark's actual wealth. Let's get into the nitty-gritty. Let's start with the big name that everyone, and I mean everyone, knows: Vanguard. When Mark first started looking into index funds and the snowball effect, he felt like he had to go with Vanguard. They're the pioneers, right? Jack Bogle is basically the patron saint of low-cost investing. Mark opened his account with high hopes. He thought, this is where the pros go. But here's the thing. The moment he opened the app, it felt like he had stepped into a time machine back to 1995. It's clunky, it's slow. Navigating the menus feels like you're trying to read a textbook in the dark. For a modern investor like Mark, who wants to be agile and check his dividends while he's waiting for his coffee, Vanguard's interface was, quite frankly, an ordeal. But okay, we can forgive a bad app if the results are there, right? Well, that's when Mark hit the real deal breaker: the lack of fractional shares for ETFs. Now, you might be thinking, why does that matter? Well, let me explain. Mark is a disciplined guy. He wants to invest every single week, no matter what. But let's say he has $50 this Friday and he wants to buy a piece of a powerhouse technology fund like VGT. If that fund is trading at $450 a share, Vanguard basically tells him, sorry, Mark, your $50 isn't enough. Come back when you've saved up the full price. So what happens? His $50 just sits there in a settlement account doing nothing, earning pennies. We call that cash drag, and it is a silent thief. It's the enemy of compound interest. Over 18 months, Mark realized that Vanguard is a great place to park $1 million and never look at it again. But if you are actually building your way to that $2,800 monthly goal, Vanguard feels like you're trying to run a marathon in hiking boots. It's just too heavy and too slow for the modern path to freedom. So after about 6 months of fighting with the Vanguard app and watching his cash sit idle, Mark started to get frustrated. He thought, okay, maybe the old school vibe isn't for us. Maybe we need something more professional, something with a bit more polish. That's when he decided to move a chunk of the experiment over to Charles Schwab. Now, walking into Charles Schwab felt like walking into a 5-star hotel. It's the elite club. When Mark signed up, the onboarding was seamless. And the customer service? Absolutely legendary. I'm not exaggerating. Anytime he had a complex question about a tax form or how a dividend was being processed, a real human answered the phone in seconds. And the tools, the tools are incredible. Schwab recently integrated the Thinkorswim platform, which is like a NASA control center for your stocks. If you're a data nerd who loves staring at hundreds of technical indicators and heat maps, Schwab is a playground. Mark spent the first few months just exploring the sheer amount of data they give you. But as the months went by, a different kind of problem started to surface. Mark realized that Schwab is built for traders. It's built for people who want to be in the trenches every day, buying and selling on every market wiggle. But Mark's goal is passive income. He wants his freedom. He doesn't want another high-stress job staring at charts. The overrated part for us was the the sheer complexity. For a passive income investor, 90% of those bells and whistles were just noise. It actually started to make him second guess his simple strategy. He'd see a chart and think, wait, should I be doing something else? It creates this psychological friction. Plus, while Schwab is much better than Vanguard, their version of fractional shares, what they call stock slices, is mostly limited to the SP 500. If Mark wanted to buy a specific high-yield ETF or a mid-cap growth fund in small increments, he was back to the same problem. Schwab is a great professional partner, don't get me wrong, but it felt a bit like using a fighter jet to go buy groceries. It's impressive, but maybe just a bit too much for the simple path we're trying to follow. At this point, we were a year into the test, and Mark was getting a little worried. One platform felt like a museum, and the other felt like a cockpit. He was starting to wonder if a perfect middle ground even existed. He wanted low costs, but he also wanted modern features. That's when he finally spent some serious time with Fidelity. And I have to tell you, I really wish we had started there from day one. Fidelity feels like the platform that actually sat down and listened to what the modern investor wants. It's fast, it's modern, and the mobile app is actually fun to use. It doesn't feel like a chore to check your portfolio, but beyond the looks, it's the engine that really impressed us. First, let's talk about the Fidelity zero-fee funds. Fidelity was the first major player to say, hey, we're going to give you index funds with literally zero management fees. Not 0.03, but zero. For a guy like Mark, who is hyper-focused on keeping every cent of his returns, that is a psychological and mathematical win. But the real game changer, the absolute secret sauce, fractional shares on everything. Unlike Vanguard or Schwab, Fidelity lets you buy a slice of almost any stock or ETF with as little as $1. This was the moment everything clicked for Mark. It meant that every single week, his $50 investment went to work immediately. But even better, it meant his dividends could be reinvested to the penny, regardless of the share price. Fidelity also has this incredible income tab. It's basically a dashboard for your future. It shows Mark exactly when his next check is coming, which companies just gave him a raise, and it visualizes his money tree growing year by year. It turned the boring process of investing into a visual roadmap to freedom. After 18 months, it was clear. Fidelity was the only platform that didn't just hold his money. It actually cheered him on. Now, I know what you're thinking. Okay, they're all fine, but show me the money. And that's exactly what I did. I sat down with Mark, and we crunched the data for all three accounts over the last 18 months. We looked at the fees, the returns, and that hidden cost I mentioned earlier, the cash drag. Let's look at the Vanguard account first. Because Mark couldn't buy fractional shares of his favorite ETFs, he had small amounts of cash, $50 here, $20 there, just sitting idle in the account waiting for a full share price. It doesn't sound like much, right? But when we added it up over 18 months, that cash drag meant his Vanguard portfolio actually trailed the market by about 1.8%. In a $100,000 portfolio, that's $1,800 just gone. That's the cost of a nice vacation or 2 months of groceries lost simply because the platform was too handheld. Then we opened the Schwab account. The returns were solid and the fees were low. But because the interface was so complex, Mark actually found himself checking the account too much. He ended up making a few emotional trades because of the data overload, and he missed a couple of key reinvestment windows because the menus were so buried. When we calculated his time cost, Schwab was the most expensive platform by far. He was working for the platform instead of the platform working for him. And finally, we opened the Fidelity statement. This is where the winner became undeniable. Between the zero-fee funds and the fact that every single penny from his weekly contributions to his smallest dividends was reinvested the second it hit the account, the Fidelity portfolio didn't just perform better, it snowballed better. Mark earned more money, he spent less on management fees, and most importantly, he didn't have a single headache during the entire 18 months. The math was clear. The modern features of Fidelity translated into real, spendable wealth. Look, the debate between these three will go on forever in the comments sections. But after 18 months of putting my own money on the line, the verdict is in. Vanguard is the legendary gazy that's just a little bit out of touch with the modern world. Charles Schwab is the polished professional that is just a bit too much work for a passive investor. And Fidelity? Fidelity is the one that actually helped Mark build his dream without the friction. He ended up moving his primary freedom portfolio to Fidelity, and now he just sits back and watches that income grow. But remember, The platform is just the vehicle. It's the car you're driving, but you still need to know where you're going and which assets are going to get you there. If you want to see the exact portfolio Mark is holding right now to hit that $2,850 monthly goal, if you want to see the specific funds he picks and the math behind the income, you need to see the next step. Click the video on your screen right now, the fastest way you can live off dividends, and I will show you the exact roadmap Mark is using to quit his job forever. I'll see you there.